What up, guys, and welcome to the coffee shop. So I want to recap something that I did with you last night, and it was about how to trade the head and shoulders price action pattern. And it's very key that you are patient when you are waiting for this price action pattern to take place. So for those of you who didn't see the video, I just want to show you, this is your average way that the head and shoulders price action pattern ends up looking. Okay, it doesn't always look this way. It can be slightly askew, like you can have a shoulder over here, you can have this way down here, you can have a neckline, the second part of the neckline that's lower than the first one, right? You can have just slight differences. So let me put this back. There we go. Now it's going to, I already drew it out and matched it up to my price action pattern. You can see here's my low, here's another low, here's a high, just a nice wick high, another nice wick high, and then obviously the head of the shape, right? So I'm just going to put this back here so you can see what's going on. Right there. Okay. Also, I want to set this on the low. Give me 1 second right here, and this one right here. Here's the low right there. A push down. Great. Now, so what I want to show you is how to trade this. Just because you see this take place, I'm going to warn you, just because you see this take place doesn't mean you trade it to the downside. This is what I call a bearish one. Okay, that means price was in an uptrend. It came down. It continued up, made a higher high, came down. Failed to make a higher high, but it did make a lower low, okay? And then you're expecting price to continue to the downside. This is a head and shoulders pattern. And you can see that I drew out what the head and what the shoulders and the neckline would look like. So how do you trade this? It's actually really simple. You draw a line from one part of the neckline to the other, across the other part of the neckline, just straight through the low. You want to get through the low, okay? So here, you're through the low. Now, what I always do is I draw, here's that first break of structure. I want a support line right there. Okay, this can be a support line. You could see, if I take this away, there's a strong area of support here. You can see both of these candles. This one comes down. It's a nice big candle coming down, and it gets stopped out. Then there's a nice big candle pushing back up. This is my area of support, okay? I'm going to draw a line right there. You'll always find a candle like that in this kind of price action pattern. It doesn't always take place on this part of the neckline. It could take place on this part of the neckline, okay? So this is going to be your low area of support. As you can see, in the second part of the neckline, you get another candle pushing down, has a strong stop, and then another candle with a set of candles starts pushing way back up again, okay? This is your other area of support. But this whole area would be a range area. I'm not really worried about what's happening here. I want to get through this area and down below my lower support area. So I'm going to delete this one. You don't need it, okay? Just want you to see what you should be looking for. So you drew a line across your neckline, across the lows of your neckline, and this is a downtrend. It doesn't matter if it's a downtrend or an uptrend. It doesn't dictate anything. Then you draw another line that is your strong support area, right? This is your break of structure. Price came down really hard, went up, and it bounced off of this level. That means that you want price to break down and get through this entire area, okay? You need to break through this support area, and you need to break through the intersecting line of the neckline. Only when you get below this with a nice strong close and reject off of it, okay? Rejecting off of that area is key. What's going to happen is price comes down through the area. At some point, it turns back. It either rejects here or it rejects here and turns back down. If price breaks back up into this area, you want it to reject here. If it doesn't reject, it's a continuation move to the upside. If it rejects here, that's already your move to the downside, at which point you trade. Always trade your short when you get below the neckline. So that ends up looking like this. This is how you trade this to the downside. So I wanted to cover all that so you know what you're looking for. Enter a short position when you get below the neckline. Don't do it automatically. Just do it when price breaks below that. Your stop loss is going to be up here at the top of the right shoulder. That's your stop loss. Now, like I said to everybody on this channel, I will always tell you where to take your profit. So your take profit is going to be this. Take a trend line, go to the top of your head, and go to the intersecting line of the neckline. Go to the intersecting line of the neckline. Take that line, you want the length of that line, and you want to put it at your entry, right there. You want to put it at your entry. I don't know that this is the entry level, but it should be somewhere in this area. Candles could come shooting straight down, or they can cascade down slowly. So you want to find this as your take profit. Now, you want to confirm this by doing a couple of things. Take your Fibonacci tool. The setup that I have for you, you can find it in my profile. Take the Fibonacci tool, put it at your stop loss, and drag it down so that the 0.382 or the white line is at your entry, okay, right at your entry. And you're going to see where take profit 3 is. Take profit 3 is now all the way down here. This is just a slight confirmation. You want to look left. Look left, okay? Now, if you know about market imbalance, you will see that these two long candles came up consecutively and then trickled down. These two long candles created a market imbalance. This wick came down and it closed below that imbalance. So this area is already boxed off. The market has already scooped up the liquidity and it's done what it needs to do there. However, you also have these two large candles below those candles, right? See these two large candles right here? Nothing really scooped those up, right? This wick took care of the top part of that candle, but you still have this. This is an imbalance still in the market. So your take profit should be somewhere inside that level. I'm going to take the split between these two will be my take profit. I'm going to mark that. That will be my take profit level. And if you look to the right now, you'll see that your take profit, your original one, is just about right there. So this is adjusting your take profit. Okay? Always look left. You were in an uptrend, and at some point there was this huge push to continue moving up. Continue moving up. And market imbalances needed to be corrected. Here's a market imbalance, these two candles. Take the split between these two, because this split is also, look further to the left, it's also where price came down, hit strong, and got pushed back up. This is a nice support level. It's another support level. You want to trade down to this support level. So never mind about take profit 2, never mind about take profit 3. This is just a confirmation that you can get this far. Now, like I said, just because you see the price action taking place and making a head and shoulders pattern, it doesn't mean that you enter for a short position. You have to wait for price to break below that neckline. Then you enter for a short position. Don't do it just because you see the shape. So, that being said, this is exactly why you have to be patient with the market. Okay, I'm removing these things. You can see, I'm going to take this off. Well, I'll just move this over here, right? There. And you can see here's the neckline, right? Let's just call this neckline. Call that neckline, okay? Now, watch what price did. Price never reached your neckline. It never made it down there. Okay? Price came down, never made it to the neckline, moved back up, and this is the current price action. So what am I doing at this point? I'm doing this. I'm continuing my move to the upside. This is the candle that breaks RSI 0 level. I'm going like this, and my new take profit is right here. Okay, my next take profit is right here. Why this level? I'm going to mark this level. Okay, look to the left. Look to the left. You see this high? This is the head. This high coincides with take profit 3. This is my first take profit. I'm going to keep this level. And then I'm going to observe the market and continue scalping on my way back up to that 17% level that I wanted to hit originally. I believe the market is going to keep going up, and I will still hit my 17% that I wanted at this level. So that is how you trade a head and shoulders price action pattern. as well as waiting for price to break through the neckline. This is why you do this. Now, I want to give you a little spoiler alert, okay? What else was telling me at this point that price was not going to continue to the downside? Well, I have a little tool on my chart which I want to show you. And this is the new version of the bull bear power void MTF volume. All right, it says prod for production because I have not released it yet. But this is now showing you, let's do this. This is now showing you volume on 2 time frames at the same time, okay? Blue is for the upward volume, red is for the downward volume. And you can see that, let's try and find a push to the downside here. This would have been a strong push to the downside. You have red volume on current time frame showing from higher time frame, okay? This is showing the next time frame. You can see that volume breaks to the downside outside the void, and the higher time frame volume is larger than the current time frame volume. So this must have been a push to the downside. And let's see what happened. Yep, this is a big push to the downside right here. This is the first one that breaks below, right? First one that breaks outside the void, and it breaks through. It's capable of breaking through this support level, which has been observed over and over and over again. Support level also is previously in the market. So you can set this tool to tell you, let's go here. I'm currently on a 1 hour chart, and we all know what 1 hour volume ends up looking like. 1 hour volume looks like this. There, right? This is what it currently looks like on your screen. But when I release this, you're going to be able to see 2 time frames of volume at the same time. So here is the high time frame volume, right? This is the higher time frame volume. It's immense. There's a lot of volume to the upside still. Blue is bullish volume, red is bearish volume. And where it appears above or below zero dictates the move of the market. It also dictates the trend. So that being said, my higher time frame volume that I'm looking at is a 2 hour volume. You can set it for whatever you want, okay? You can set it for 4 hour volume, and it will only display volume bars when the 4 hour has been closed. There you go. So now you can see volume on 2 time frames at the same time. All right, peeps. Sorry about the lag in the audio. I'm recording this a different way, and I will be back in full-fledged, full swing in the lab for the coffee shop tomorrow. Bull bear power void coming at you. Oh, yeah, like I said, that push to the downside. Here was the right shoulder. Here we go. Here's the right shoulder. And as the right shoulder came down and met this swing low, I see what? What am I looking at here? Let's just do this. Here, let's go right here. Draw a vertical line. I got this low right here. Take a, nope, I don't want the RSI. No, we don't want that. Here. The bull bear power void was showing me on current time frame as well as the next level time frame. Let's go to the 2 hour here. Current time frame and the next level time frame. Okay, current time frame barely broke outside the void, and this was already up above the void. So this should be a push to the downside. However, the next volume candle, you lost volume to the upside. You lost volume to the downside, right? You lost bearish volume. It's a nice slope down. And this, you already lost volume on current. So current volume is lost, higher time frame is lost, which means price is not going to sustain this downward trend. It's going to continue to the upside. This would have been your entry for a long position right here. This is breaking all of your support levels, all of your resistance levels, and if I draw a line right here, you will see that it matches. Look, the right shoulder right here. This candle matches the right shoulder, and it starts breaking the right shoulder. This is where your move actually goes to the upside. All right, people, let's go.